So, back to me to talk about corporate tax and business tax. The first thing I'm going to mention is something that Rachel Reeve actually announced in the budget speech yesterday, which um, didn't really ring too true for me. She talked about corporate tax, and she said that in the UK, our corporate tax rate is the lowest within the G7. And I took a while and I thought about that, and I went back and researched it because I didn't think it's entirely true. And I'm absolutely right. It wasn't entirely true. So corporation tax rates in the G7, she said we had the lowest rate in the G7. It's not entirely true. If you look, the USA has lower, and we're also the same as France and very, very close to Canada and Italy. I think it's the use of words, because we have a 19% tax rate for the first £50,000, and I think she was referring to that 19%, but our headline 25% is certainly not the lowest within G7. As I say, it's always in the detail, isn't it? So moving on to capital allowances. This is a lot of tweaking, if I'm totally honest with you. There's no huge headline changes for you to be worried or concerned about. Quite a lot of information on this slide. The headline here, though, is you still get annual investment allowance for your first £1 million of capital spend if you're an incorporated business or an unincorporated business. That's not changing. If you're a company, you still get full expensing allowance on any items that you're buying brand new, and that's unlimited. But the changes they announced yesterday was a new 40% first-year allowance where you may have assets that don't qualify for either of those 100% allowances that I just mentioned. Particularly for unincorporated businesses where assets don't qualify for AIA for some reason, and particularly for companies where they acquire leased assets that don't ordinarily qualify for 100%, they should get this new 40%. But the downside is they've changed the residual 18% writing down allowance down to 14%. So they've really tinkered with this and tweaked things. They haven't made any headline changes. I don't think you need to be terribly concerned unless you have a lot of leased assets that previously you haven't been able to qualify, and actually that's an enhancement for you rather than a loss. Remember, capital allowances is all about timing. It's not about an absolute tax charge. Sticking with capital allowances, but looking more to the electric cars, they've extended the 100% first-year allowances on new electric cars and new electrical vehicle chargers for another 12 months through to 31st of March 2027. So that's good news. A reminder on this slide that car benefit rates for low emission and electric vehicles are going up. They are set to go up quite significantly by 28-29. The headline here is it's always been very, very tax effective to have an electric car. That will reduce going forward, and certainly as you get further towards 28-29. There was also something else introduced yesterday, and that is that electric car drives will need to pay 3p per mile travelled duty in some way, shape or form from 2028. And if you're in a hybrid vehicle, it will be 1.5p per mile travelled. And the reason they're introducing this is to try to recover some of the £1.4 billion that's been lost because people are not buying diesel and petrol at the pumps, and the vehicle duty is therefore not falling back to the exchequer. So they're giving it away in one hand and clawing it back in another, I think it's fair to say. Further details are awaited in that respect. Moving on to employee ownership trusts, a bit of a change here. And this actually became effective from last night. These were introduced back in 2014. But essentially, you can sell your business to an employee ownership trust and not pay any capital gains tax, or you could do until yesterday. So it was a relief was available to reduce all of your capital gains tax in those circumstances. So looking at my example here, where you have £1 million gain, Until yesterday, you had no tax to pay, and from today, you have £120,000 to pay. It's still a saving of £120,000 compared to a normal rate of capital gains tax, but it's very different from what we have been talking about for the last 10 years or so. Employee ownership trusts have had a few tweaks and changes over the years. In 2024, there was a change that made sure everything was at market value to make sure that selling to an employee ownership trust was not a tax-motivated decision. I think they still remain a good idea, particularly if you're in the right trade or sector, and particularly where you have a culture of employee ownership within your business. But they don't suit every circumstance. So let's move on to changes to EMI, to EIS and VCT. The first thing to mention is about EMI option schemes. Now, these are the best tax advantageous share option scheme around. They allow for the full increase in value from the date an option is granted to the date it's exercised to be chargeable to capital gains tax rather than income tax and under PAYE with national insurance. They're great schemes. There is some criteria to fulfill. You'd have to be in a qualifying trade. And from 6th of April next year, larger businesses will qualify for EMI that previously they wouldn't have. So that's good news. There is one other further enhancement, and that's currently the option has to be exercised within 10 years, and they've extended that 10-year through to 15 years. Moving on to EIS and VCTs, again, they've increased the limits where these valuable reliefs can apply. So much larger businesses with gross assets up to £30 million can now qualify. Graham mentioned earlier about the VCT relief reducing from 30% for income tax purposes down to 20%. So EIS and VCT historically have always had 30% together. VCTs go down to 20%. They are there to encourage investment in early stage startup companies. EIS gets some other tax relief. It gets capital gains tax deferral relief, and VCTs gets income tax exemption on dividends. Remember, these are high risk investments, hence you get the tax break. You get nothing for free, I think it's fair to say. Moving on to research and development. Every year there's tweaking of research and development tax relief, and this year is no different. Historically, we've had some really, really bad behaviour. The behaviour started with HMRC in that they never looked at an R&D claim. Every R&D claim that landed on their doorstep, they agreed. This led to abuse within the sector, with specialist R&D boutiques being set up that were really promoting schemes and projects that really didn't properly qualify, but they were still getting enhanced tax relief. Suddenly, HMRC realised, they jumped on it. They then started to make inquiries too frequently on an awful lot of cases that quite clearly qualified. They introduced some changes in 2024 to standardise the claim, to fill in detail in a prescribed format to help policing of an R&D claim. They also introduced something whereby you have to register the first time you make an R&D claim. You have to register within 6 months of your accounting period if you're new to R&D. And they've now announced some further enhancements. The further enhancements are that you can now get advance clearance and advance assurance as to whether your R&D project will qualify. I think that's a really good move. It comes from the spring of 2026. We're still awaiting further detail, but my chart confirms what I've just explained to you, and that is the number of claims that are being lodged with HMRC is reducing significantly because of all the problems that HMRC have had and caused, I think it's fair to say, at their end. And finally, I just want to mention to you about compliance and evasion. Now, every year we hear stories. I'm going to click through these quite quickly. We hear stories of all kinds of measures that they introduce to try and make sure that they reduce the tax gap, and they pounce upon non-compliance. This year is no exception. They're doubling filing penalties. They're chipping away at evasion within the construction scheme. There's a £10 billion clampdown on promoters of tax schemes. There's also rewards for tax informants. Did you know you could get up to 30% of the tax take where you are a tax informer? They're also introducing some 350 HMRC criminal investigators to tackle tax evasion on our high streets, to attack what they describe as fake shops. Rachel Reeves' words yesterday in the budget described them as dodgy businesses. She talked about the gig economy, and she talked about those that vanish without paying their tax. And why? This is why. It's because the tax gap is huge. And everything they can do to try and recover that is, a positive step in filling the black hole. It's 5.3% of the total, and it's £46 billion that's not collected that should be collected. And when we talk about the black hole that they started with, wouldn't this be a great way to tackle evasion and fraud within the tax sector, to fill that black hole rather than raise our taxes? And I leave you with that thought. So that just leaves me to close this morning's event. I think we will have you away by 10 o'clock as promised. Remember, we are here, as always, to guide you through the torrent of change and complexity as a result of the UK tax legislation, which is the largest in the world. It's some 21,000 pages long. So firstly, can I thank you to all of the speakers today, who I'm sure you will agree have worked incredibly hard in a very tight timeline to deliver the event this morning. They are, of course, supported by our hugely talented tax team. Thank you to Trinity Park for hosting today. Apologies, the room is rather cold today. There have been some problems with the heating, so apologies from them. But they have been able to cope with bringing out breakfast to us and delivering it on time and clearing it away, so thank you very much for that. To our long-standing AV partners, Hart & Wilcox Limited, thank you very much. Finally, to our great marketing team who organise everything, and their attention to detail is phenomenal. I said to them only this week that if the budget got any closer to Christmas, we would have to make it a pantomime-themed event. Come on, it's teamwork. Come on, you're a bit slow there. I'm just checking there's no one behind me, actually, but oh, come on, it's nearly Christmas. Thank you all very much for attending today. We value your loyalty, your support, and your engagement. Please share your feedback with us. There is a QR code on the screen, and there are copies on the tables for those in the room. And we'll also ask for your feedback in our follow-up email, which will include a link through to our presentations and provide a recap, and so you can watch our presentations over and over again if you wish. But we really do like your feedback. Thank you. For those in the room, there is a small gift with our new logo on for you to take away. And remember, every day is better with cake. And sorry, I have no way of teleporting those gifts to those online. So I'm sorry you've missed out on that little gift. But finally, let me share with you once again our new logo, our updated colours and our font. And I'm delighted to share all of our news with you today as the Scrutton Bland journey continues. Thank you very much.